I'm Taylor Riggs in New York and for Emily Chang, and you are watching a special edition of Bloomberg Technology Stocks. Massive rally today, surging the most since 2008. We have all the coverage, including tech's outperformance. The other top stories that we're following this hour: President Trump declares a national emergency amid the new coronavirus. We will have the latest, plus more on the historic week in global markets. Plus, a gut punch for the tech sector. Apple is now the latest to pull the plug on in-person events. Its Worldwide Developers Conference will be offered online only. And a cashless society. Fears of the virus spreading via the greenback puts the spotlight on fintech. We'll talk to the co-founder of Square. But in the meantime, let us take a look at how Wall Street ended this wild week. I have no words. We almost erased all of the losses that we had on yesterday. Look at this. S&P having its best day since 2008. And tech, really one of the big outperformers here, followed by financials. As you can see, financials up 13 basis points. You're getting some yield curve steepening thanks to the 10-year, which at one point was back above 1%, closing firmly in there right about 96 basis points. Flip up the board because with volatility this week, it was all about the VIX. At one point this week, we had a 75 on the VIX handle, coming down now to 57. And crude, we got a supply shock and a demand shock. Crude finally holding in there above $30 a barrel. What that means is the Bloomberg Commodity Spot Index made up a lot of energy, though, so you are getting some of the weakest levels that you've seen there since 2016. And it is all about King Dollar, the safe haven bids, investors rush to cash, and the Bloomberg Dollar Index now the strongest in almost 3 years. And the market moves that we saw this week all come back to Washington, D.C. After weeks of downplaying the threat of the coronavirus, President Trump declared a national emergency.
To unleash the full power of the federal government in this effort today, I am officially declaring a national emergency. Two very big words. The action I am taking will open up access to up to $50 billion.
Joining us from Washington now is Josh Wingrove, who helps cover the White House. Josh, I was just talking about how the market seemed to like what President Trump had to say. What were your takeaways?
Yeah, there were a few sort of tangible things. One included that he said he would be tested. We talked about buying oil for the Strategic Petroleum Reserve. I think that probably caught investors' eyes in particular. Otherwise, it's a rehash of what he did. And there was one big thing left unsaid, which is what he wants to see from Democrats for that House bill. We never really came back to it, and he did not specify what it is that either he's looking for from them or he wants them to take off the table in order to get a deal done. And so that remains a big question as to whether the federal government and what the federal government will be able to actually do to address the coronavirus situation.
Josh, I want to come to you quickly, but in the meantime, I want to get you some breaking news that we are seeing, which is Microsoft is announcing changes to their board. Bill Gates is now going to be stepping down from the company's board. So again, Microsoft coming out, announcing a lot of changes to the board, including Bill Gates, who will be stepping down from the board. I will bring you more news as we get it, taking a look at some of the price action here in the post-market trading. Again, Microsoft had traded up more than 11% today. So as we wait to see how this sort of folds out, we do know that Bill Gates will continue to serve as a tech advisor to the company, but looks like he is going to be stepping down from the company's board. I will continue to bring you news on that. Gates saying that he wants to dedicate more time to philanthropy. So again, we'll get you more news as that comes. Josh, since I have you still with me, let me do some whiplash and switch back to you and some of the news that we're getting out of D.C. A lot of the fiscal measures that we saw, waiving interest on student loans, buying some oil reserves to help prop up the market. Which, in your opinion, do you think will be the most effective in terms of stimulating what could be a slowdown in the economy?
I think in some ways the biggest hits are yet to come, for lack of a better phrase. Again, that bill that I mentioned, but also Trump wants to do some sort of payroll tax measure. There's a lukewarm reception in Congress. It doesn't look like that's going to happen, but that would arguably have a bigger impact. The White House has sort of drawn a line between the oil price crunch and the coronavirus fallout. You know, we also learned earlier today that they're looking to help airlines and other sectors that have been pinched by this, in particular if they need short-term liquidity to get through a slump in demand. So again, President Trump didn't talk about this. So, you know, markets are reacting very positively. I don't want to say, you know, markets are always right, obviously, Taylor, clearly. But there are a lot of questions left unanswered in this press conference. And I think we might see some details spill out later tonight, over the weekend as well. But this isn't over in terms of laying out the plan, what the federal government will do. Though I think investors were looking for just a sense that, there was going to be a plan, were there tests? The U.S. has tested very few people. And so maybe that kind of detail that came out, a move to widespread testing, drive-through testing at your local Walmart, that kind of thing, maybe that was what gave investors pause to say, hey, they can keep a lid on how widespread this disease will be, this virus will be, and as such, the slump in demand won't be as long as it might otherwise have been.
Josh, curious about your thoughts on some of the travel restrictions that we've seen. President Trump said he's certainly not forcing Americans to stay home. They can continue to travel to places like Seattle and New York, where we've seen some of the biggest increases in cases, yet he said staying home also could be a good idea. Is that the appropriate balanced response?
It's absolutely a mixed message we're getting from them. The Treasury Secretary said earlier today he'd get on a plane to LA right now. He'd be comfortable doing that if he wasn't working 24 hours a day. But, we're also seeing things like, if you don't have to visit someone that's living in a long-term care home, an elderly person, maybe don't do it. So there are also sort of like, a mixed view on this. And of course, they're trying to stop people coming back who are not Americans, and Americans who are flying back from Europe are going to be funneled through 13 different airports that we learned about today. So I think in general, they're still hoping that flight is restricted and that people aren't moving around as much as you might otherwise have seen. And even he mentioned that he might even change those travel restrictions. For instance, adding potentially the UK. He said that there's been a spike in cases in the last 24 hours. In particular, the wife of the Canadian Prime Minister contracted the coronavirus on a trip to the UK, but maybe removing other countries from the list of countries that he tabbed for travel restrictions related to the coronavirus. And a reminder that those kick in tonight at 11:59 p.m. So as of then, people that are coming from those countries are going to be funneled through certain airports subject to testing and maybe denied entry to the U.S.
Josh, another question to you. There were some concerns about President Trump's health himself. He said that, of course, he was not showing symptoms, but there was a likelihood that he could be tested for the virus in the coming weeks. How big are the fears and concerns over the president himself?
I mean, I think people are wondering why it is that he was photographed with someone, an aide to the Brazilian president, who has the coronavirus, who's tested positive for the coronavirus, and yet isn't going to get tested. He said early on he wasn't going to. He said later in the press conference, yeah, I probably will soon get tested. But, they were also preaching good practices up there, saying people should wash their hands, etc. That remains the sort of core advice of health professionals. But they're also up there shaking hands and, everyone touching the microphone and everyone touching the podium. So I don't know that the best practices were entirely on example during that lengthy press conference that we saw, but I think the president sort of has conceded that it might be good for public sentiment, investor sentiment also as well, to have a test just to make sure that his exposure to, in particular that Brazilian, but also other lawmakers who'd been in contact with a potential case at a conservative conference 2 weeks ago. There've been a series of potential contacts where this could have made its way to the president. So I think that's why there are calls for him to get a test.
Our thank you to Bloomberg's Josh Wingrove. And as we've been talking about, we had that breaking news on Microsoft saying that Bill Gates will be stepping down from the company's board. So to break down all of this, I want to bring in Dan Ives over at Wedbush. Dan, I know that the news is just coming out. We do know that Bill Gates is going to be stepping down from the company's board, but Microsoft seems to be in good hands. We do have CEO Satya Nadella, who has been in the reins here for several years here. What is your initial reaction on a Mr. Bill Gates stepping down from the board?
Look, this is a historic move. I mean, Gates, obviously the legacy, speaks for itself and really rarefied air. And this is really, the baton fully being handed to Nadella. I mean, Gates will still be there as an advisor, but no doubt this is, I think a seminal day for Microsoft, and just shows, with Gates leaving, the confidence in Nadella. But no doubt, just what I view as a historic day with Gates leaving the board of Microsoft.
Dan, I hate to be a pessimist, but when we hear a founder come out and say that they want to step down, they'll continue as an advisor, but they want to dedicate more time to philanthropy, can we believe that?
I think in this situation, just given, what obviously Bill and his wife have done in terms of philanthropy, I think this is unique. And I think it's one where this has been a staged sort of, process over the last few years for him to take further steps back from the board, and this is the final step here. And ultimately, it's really, you take a step back to where Microsoft is. I mean, Nadella has, in my opinion, probably one of the biggest transformations of any technology company the last 20 years, along with everything we saw at Apple. And I think leaving it in obviously great hands, and I think it also speaks to the timing in terms of confidence to leave at this point, given what Nadella has done with the cloud and Microsoft.
Dan, remind us again the difference between the visionary, the founder, and the CEO who's running the business. What did Bill Gates represent relative to Satya Nadella, who has been a very good CEO running the day-to-day business?
Yeah, I mean, Gates built the modern computing ecosystem that we live in today. I mean, if it's not for Bill Gates, I'd say 90% of the tech companies that we know today don't exist. Now, Nadella had the cloud vision, but that was really something that Gates helped push toward as part of that team. But I mean, when you talk about Bill Gates, you're talking, the Thomas Edison of technology, right, in terms of what we're seeing.
Dan, since I have you, and of course you've been covering all of these stocks, give us a reset on where Microsoft is in the midst of the coronavirus. As we talk about all of these fears, as you've been taking a look at the deep dive of the financials, how is Microsoft really positioned to weather this?
I think when you stress test the model, and we've stress tested, took 10, 15% of revenues off, at this point, this is a name you buy with both fists, in our opinion, on the other side, where they are in the cloud. The PC business, obviously very exposed from the supply chain. 80 to 90% of the valuation is cloud. That's why, in my opinion, in terms of all the volatility we're seeing for long-term investors, Microsoft is the name that continues to stick out, and I continue to think a year from now north of $200.
Dan, wonderful analysis. I want to keep you with me, and I want to go over to one of your other peers who we have joining us via Skype, Michael Levine over here from Pivotal Research. Michael, I know being on Skype, you might not have your trusty Bloomberg terminal in front of you, but again, as we know, Bill Gates stepping down from the board. What does this mean for you?
I mean, I tend to agree with Dan, and I think people would feel differently if Satya had not done such a commendable job transforming the business. So I think people look at what he's accomplished in terms of making the cloud like catch up. Where if you asked 3-4 years ago, is there a scenario that that Microsoft could be conceivably narrowing the gap in terms of growth with Amazon? I mean, they're still quite a bit smaller, but I think he's done a commendable job. I mean, I think I don't think investors will look at it as being a negative.
Michael, the stock in after hours trading off 2.7%. We have to put that into perspective. We were up 11% on Friday through the close. How much of that is just taking a little bit of a breather? How much of that perhaps is some nervousness about a big founder perhaps stepping away?
I mean, hard to say. It does look like some of the things are also giving back some of the gains, which makes me think a lot of the move into the close was probably a little bit squeezy. But I do think this is likely, we haven't rolled out coverage on the name yet, but I agree with Dan. I think this is the type of name that folks are going to want to lean into.
And Michael, Dan had answered this question earlier, and I want to get your thoughts on it. You see increasingly within this technology sector, founder stepping down and you have the firm bench, firm leadership coming in up the helm, sort of a new generation. What do we want to see from a leader, a CEO that is different from a founder and a visionary that we had in Bill Gates?
You know, it's a fair question, Taylor. I think one of the things as I'm thinking about some of the big tech companies, you'd like to see them having been with the companies through crisis. I think that's probably more important now than it probably was 3 weeks ago. And really having demonstrated product vision and being able to galvanize the organization behind them. And, so I'd say Satya basically checks all those boxes pretty well.
You also cover another company that Microsoft right now is in the crosshairs of, and that's Amazon. Talk to us a little bit about the cloud space right now, given some of the fears over the coronavirus, how these cloud companies like a Microsoft, like an Amazon, are set to really weather the storm.
You know, I've talked to the company earlier this week, and, we had a note out on Monday talking about the way we looked at implications from from coronavirus in terms of marketing, in terms of cloud. I think it's a different kind of sell than typical software selling. It's much more of a consultative sell and explaining to customers, here's some additional benefits you may not be going ahead and generating. But look, let's be clear. Like, sales folks get on the road. Part of how they make action happen is getting in front of customers. So I think this is going to be very disruptive for, the cloud space will probably be relatively more resilient because assuming your website is still up and going, and we actually think in all likelihood, this probably drives an increase in internet usage, just people spending more time at home, relying a little bit more heavily on e-commerce. I do think it's going to be disruptive. I mean, so you're going to see the growth rates clearly slow down.
I want to keep both of you with me. That's Michael Levine and Dan Ives. Stay with me. In the meantime, I want to go over to Tom Giles. He's our global executive editor of Bloomberg Technology. He's been covering companies like Microsoft in his decades of experience. Tom, I've given you a little bit longer than I gave my last guest. You have now 3 minutes to digest the news. Your take.
Yeah, I mean, this is Bill Gates saying that he wants to devote more time to philanthropy. This is something that Bill Gates has been doing spending so much of his time doing for several years. This just goes the next step. It's also a vote of confidence in Satya Nadella. This is the CEO who's been in place for about a half decade already, and he's basically shown that he has created a major turnaround for Microsoft, which before he took the helm was going in a direction that a lot of people had lost a lot of confidence in the company. The stock was, the stock was flatlining. And so Satya has breathed new life into Microsoft, its technological sophistication, its engineering talent. There's a lot of excitement around the company, despite what you've seen happening with the stock in recent weeks because of the coronavirus. Overall, the trend for Microsoft is a very positive one. So Bill Gates can step away from his brainchild in full knowledge that the company is in good hands. That is something that every investor that we talk to will say about Satya's leadership at Microsoft. And by the way, Bill Gates isn't fully stepping away. He's going to continue to provide technological advice to Satya on an ongoing basis. He'll be doing it without being on the board per se in a formal basis.
And Tom, I don't want you to speculate too much on the price action that we're getting, but in after hours trading on this news, we are down 3%. That was after a massive gain, though, that we got Friday during the close. Any sense of nervousness here, or is this just sort of a normal reaction to a major founder stepping down?
It's a major founder stepping down. I mean, he is someone who was, the heart and soul in many ways of Microsoft for a very, very long time. His legacy is a very important one. And he's the one who founded and brought that vision. So I think he definitely in the memo that in his post, he definitely wants to convey that he's not leaving it behind completely.
Wonderful. For that analysis, quick too on the spot, Tom Giles, global executive editor for Bloomberg Technology. And as we take a look at the broader tech sector, it does continue to play a major role in some of the wild market swings that we've seen this week. all as a result of the coronavirus. Consumer confidence and overall resiliency in the sector is being tested. The big standouts include advertising, cloud computing, global supply chain. This is all according to Michael Levine of Pivotal Research, and he continues to stay with me via Skype. And I also still have on the phone Dan Ives of Wedbush. Thank you both for being patient with us as we digest the Microsoft news. I want to broaden this out, though, to just look sort of at broader tech. So, Michael, let me start with you. We look at the coronavirus. Who, in your opinion, under your coverage, are the winners and the losers?
So I think net, there really are not a ton of winners, at least in terms of what we look at in coverage. I think e-commerce benefits nicely. So Amazon should actually do well. I do think you're going to start to see some constraints on the supply side as they probably get some stuff depleted. My sense is that, from a conversation with them this week, I think they actually started to buy quite a bit more. So you probably will see the business mix more towards first-party sales versus third-party. But our sense was that actually advertising started to get weaker there in the month of, the month of February, even before you saw the markets have this drawdown and see the real spread outside of China. But overall, Taylor, I mean, look, the thing that we try to emphasize on Monday to folks is when at this point you probably have got boards who are in war rooms, let's just say the advertisers first, and you're sitting there and you're like, what's must to have versus need to have? What can I basically slam the brakes on versus not? I mean, advertising in general is very, very exposed to this.
And Dan, you have different areas of coverage, but generally, as you look to your coverage universe, who stands out to you as some of the winners and the losers as we digest the mania and peak fear now of coronavirus?
Look, there's technically no winner, but I think when you think about the tech space, you look at areas like cloud, cybersecurity, look at names like DocuSign, Microsoft on cloud, cybersecurity names like Zscaler. Those are ones that are still clear beneficiaries. Supply chain most exposed, but as we've talked about, I think that's temporary. That's 3 to 6 months. And the other side of that's why you own 5G plays like an Apple. And in my opinion, it's going to be a roller coaster, a volatile period, but it's one where on the other side of this, I think these are the names, these are the opportunities. And we're definitely not in the doomsday Armageddon camp like some others.
Dan, also in your coverage universe are some of the cybersecurity firms. We were looking at some analysis earlier that showed sort of an uptick in potential phishing, cyber attacks coming from abroad during our mania here because we seem to be distracted. Are you seeing potential cybersecurity firms get a boost on this as we start to work from home and need to ramp up our own security for the companies of which we work for?
Yeah, we are. I mean, I think in cybersecurity, in a 3 to 4% IT spending environment, cybersecurity, we believe, is growing 5-6x that number. And that's why I believe that continues to be a space that's going to show strength. And we also see a lot of M&A. Remember, with everything we're seeing here, I think valuations, you're going to see strategic as well as financial M&A in cybersecurity. And that's why that continues to be what I view as a rock-solid area to focus on, even in these volatile times.
Michael, do you see anyone in your universe now either looking to buy M&A, because you can get companies now 40% cheaper than they were before, or do you just get to see smaller players start to get shaken out here?
I think the logical large acquirers in my space, if I look at Amazon, Facebook, and Google, the reality is they're also facing regulatory scrutiny. So I think it would be very, very hard for them to do something large. I mean, I guess if you get down to a particular valuation level, maybe Pinterest piques the interest of a traditional media company. But I think they probably have got some rough riding ahead.
Michael, how is coronavirus changing consumer behavior around these social media sites?
I think it's too early to say. I would guess that usage is probably up by quite a bit. But but look, so much of what drives online advertising is what's actually happening with the consumer. So I mean, the last real macro freakout I could think back to was seeing weakness in Europe in mid 2012, and Booking.com, Priceline at the time, they basically were highlighting that their efforts on Google were seeing more people doing window shopping, taking shorter trips, booking lower ASP types of hotels. So, the DR space, the direct response advertising, which is a huge part of Google and Facebook, I mean, that just sees a downtick. And I just have a hard time seeing the consumer not under pressure as they're seeing what's going on in the world.
And as we talk about the consumer, we can fold that back into your world, Dan Ives. A consumer like an Apple, I think a Tesla, are they going to be okay? Because China, and I think of Tesla's Shanghai factory, is on the other side of this.
Right now, there's definitely some clear headwinds in China. But that's why, as an investor, you got to basically write off the March quarter, focus on what it looks like next 6-12 months in terms of China. You look at Tesla, that's 100,000 cars in the first year. And you look at Apple, there's a super cycle at 5G with 60 to 70 million Chinese consumers in the window of an upgrade opportunity with all the Apple stores now open in China. So that's why it's forest through trees time. It's a long-term, what I view, game-changer opportunity. Near-term, it obviously is a headwind, but I think that also creates the opportunity for those investors to look on the other side of this dark period.
Michael, I want to flip back to you. A sort of final question here. Final thoughts. What would be the message you would be trying to get across to clients, readers of your good research on some of these stocks that you cover as we weather the volatility?
I'd step back. I agree with Dan. I just don't know if we're talking 3-6 months. That to me feels like the best case scenario. Do I think this necessarily means we go into a protracted global recession? Unclear. I just don't think anybody at this point knows. But I'd like to bet on the companies who've actually navigated through this in terms, and in terms of looking through coverage. I thought through this, and really Google and Amazon are the only two, in my opinion, that are battle tested in terms of having seen what bad looks like back in 08, 09. I mean, in reality, all of online advertising has had massive secular tailwinds at their backs for years. So, I mean, I think it's going to be a volatile period. And, as talking to some investors, I don't think you can just say there's a 15-20% cut. I think some of these companies literally spend could go to zero from a good chunk of their clients. So it could be pretty ugly.
Well, I want to thank both of our guests, Dan Ives of Wedbush and Michael Levine of Pivotal Research. Can't thank you enough for that stellar analysis after, of course, we got the news. Microsoft saying that Bill Gates will be stepping down from the company's board, going to focus on philanthropy. Much more next. This is Bloomberg. Taylor Riggs, and this is a special edition of Bloomberg Technology. It was a historic week in the markets, and we will get to that in just a moment. But first, I wanted to bring you some breaking news in after-hours trading. Bill Gates saying that he is stepping down from Microsoft's board. He's saying in a blog post that, quote, Microsoft will always be an important part of my life's work, and I will continue to be engaged with Satya Nadella and the technical leadership to help shape the vision and achieve the company's ambitious goals. Gates founded Microsoft back in 1975. He grew it into the largest software maker in the world. He hopes now to devote more time to philanthropy. Now, of course, in the meantime, we've been following the markets, and the S&P 500 posting its best one-day gain since 2008. Stocks rallied in the last hour of trading, erasing almost all of the losses that we got from Thursday, and that was the worst day since 1987. Still, though, we're on track for one of the worst weeks since 2008. Bloomberg Markets editor Mike Regan joins me over the phone from New Jersey. Mike, the market seemed to love what President Trump had to say, all rallying 5% just in that last hour. What do you make of a 10% move Friday after a 10% loss Thursday?
Well, Taylor, it's not uncommon when you have a bear market like this with massive volatility and massive down days like we saw yesterday to then see a massive day on the upside. It's very, difficult to say, okay, we've found the bottom here of the stock market plummet because these kind of snapback rallies are very common. As you pointed out, this is the sharpest one-day rally since October of 2008. Remember, that was still a good 5 months before the market actually found its bottom from the financial crisis. So while it is good to have this day, it's somewhat relieving to end the week like this with a rally. It's hard to extrapolate too much out of it as sort of the end of the volatility that we've seen. But that said, there were some positives that the market really keyed in from President Trump's presentation today, especially the decision to buy some crude oil to stock up the strategic petroleum reserves. I mean, that allowed a big rebound in oil prices, and oil energy companies, and especially the credit worthiness of energy companies, has been a very big focal point of this whole bout of volatility. And so that also allowed the banks and the financial companies to rebound pretty sharply today.
Mike, I have to ask, how is liquidity?
Well, traders and investors are reporting that it's very poor across all markets, particularly in the Treasury markets. There's just a very thin order books for Treasuries all week. The Fed's moves yesterday to pump a lot of liquidity into the money markets certainly help alleviate that stress a lot. But the problem is that corporations and investors are both sort of hoarding cash. Corporations obviously are worried, depending on what sector they're in, but many worried about their cash flow going forward as sort of their businesses dry up. So they're tapping those bank credit lines, because they know the corporate bond market is more or less shut down. So really, the banks are under a lot of pressure to provide just cash, U.S. dollars, to corporations. And that can have a ripple effect into the rest of the markets. It makes them a little less able to sort of be the market maker in the Treasuries market. So that's why we've seen these wild swings in Treasuries, too. Even when the market was crashing violently yesterday, you would expect Treasuries to be rallying and yields to go down, but they actually went up. And what we're hearing from most people is that, yes, that was absolutely because of liquidity constraints throughout the market.
Mike, quickly here, one more question. I'm going to show a chart that I'm showing for our terminal viewers on the audience, and those are spreads of triple Bs and double Bs. Guggenheim, Scott Minerd came out earlier today, and I should say earlier this week, said triple Bs could widen out to 400 basis points, so we'd have another 150 to go. And then in the blue line, we're looking at double Bs at 520 now, saying those could widen out to 750. So by those measures, spreads still have to blow out a lot more to hit a bottom. Your take?
That's right. I mean, that triple B basket obviously has been the source of a lot of people's concerns for a long time. It's such a big tranche of debt, and it really sort of will put the pressure, I think, on the government to come up with some sort of solution to the credit markets to alleviate the stress we're seeing and hopefully forestall some defaults and ratings downgrades. But certainly there is more anxiety in the credit markets to come.
Well, our thank you to Bloomberg Markets editor Mike Regan, as always, for jumping on the phone. Now, all this market action, of course, came during President Trump's press conference. The president declaring a national emergency, including $50 billion that would be freed up, emergency services, and more. All of this to try to contain the spread of the coronavirus throughout the U.S.
I'm also asking every hospital in this country to activate its emergency preparedness plan so that they can meet the needs of Americans everywhere. The hospitals are very engaged.
Joining us now on the phone to discuss, it's applied techonomics senior advisor and a political science professor at Iona College. That is Jeannie Zaino. Jeannie, thank you for joining me. What was your take from the press conference that we heard today?
I think we saw the president, which is part of the reason why the market seemed to rebound in that last hour, feel the pressure to take more decisive action as this virus has spread and really started to upend so many aspects of Americans' lives. And I think finally the market and Americans felt the president was responding in the way that they may have wanted him to several days ago, maybe a week or more ago. There had been up to this point this sense that the federal response to this had left something to be desired. But today we heard about increased testing, as you mentioned, $50 billion now that the states are going to be able to use to combat this. I think importantly, the federal government working with the private sector to develop things like drive-through testing. I'm coming to you right now from New Rochelle, New York, which is the site of the first drive-through testing in the country. We've obviously had a scourge of viruses here, of the virus here, but we're going to see much of that rolled out, the president was saying, as early as Sunday this weekend. So I think a combination of those things is what people had wanted the president to say, and I think there was a lot of relief that he and his team came out and said it today.
Jeannie, Louisiana was the first to delay their primaries. What other states could we see now come out and delay what could be the political process now if this thing isn't contained?
I think you're right. Louisiana delayed its primary. This is something that we could see other states do. There has been a lot of concern because at the same time you're hearing states like New York, for instance, the governor saying you can't have gatherings of more than 500 people. In a few weeks, we're going to ask New Yorkers to go to the polls, say a high school gymnasium, stand in line with other people and wait to cast their ballot. So we may see other states follow suit. We don't know that yet, but I think it is going to be a real challenge if this virus isn't contained before the next set of primaries start to wave in. We're going to see the debate, obviously, this weekend, and then we see voting as early as Tuesday, and that's going to continue for several weeks.
Jeannie Zaino of Applied Economics, thank you as always for jumping on the phone to join us. And as the U.S. continues to see a rising number of coronavirus cases, public anxiety also escalating. That includes concerns about using cash. Many worry it could actually be a source of transmission. Though many transactions are now contactless or digital, are we ready to go fully cashless? To discuss, we're joined by Jim McKelvey. He's co-founder of payments firm Square and author of The Innovation Stack. Jim, the effect of this coronavirus on mobile payments, is that a good thing? I know it's hard to say that it's good in a time of crisis, but...
Well, I mean, for mobile payments versus cash, it's certainly good because people are afraid to touch cash, and probably for good reason because the CDC has not yet determined that cash is not a way of contracting the coronavirus. They've actually traced cash to other infections, and people are scared, so they want plastic or, better yet, contactless payment.
What do you do when people, though, are not going to stores? If I'm not using the mobile payment in the retail footprint, are you hoping that the revenue is made up by some of the online orders if I'm staying home?
Yeah, you're going to see a lot of shift online. You're going to see a lot of shift to delivery, and you're just going to see a lot of disruption in general. But the great thing about the U.S. economy is that we have all these tiny merchants, and they're super adaptable and super resilient. So you give them the right tools, and they will make the right choices.
How are you seeing consumer behavior change now because of this? Is it permanent?
Well, who knows what's permanent, but I definitely think we're going to unearth some new trends. So, a lot of the white-collar workforce is going to work from home now. That's going to set totally new habits. I'm particularly concerned about people who have to go into work, people who are hourly workers. We're going to see a lot of disruption in those areas. We're going to have to build new tools for them. And my guess is that those tools are going to be coming from the small businesses, from the people that are on the ground living it. And what we want to do is we want to make sure that that population has access to all the best technologies so they can make the decisions, because they're the ones who invent the future.
And you mentioned those small businesses. I think loans to those small businesses from Square increased about 42% last year, year over year. Are you worried now about some of those loans and the credit quality of those vendors?
No, I'm excited about those loans. I mean, those loans do probably the most good because they're tiny loans, but they're for the people who are literally in the streets making the decisions. And things are going to be changing a lot, but that doesn't mean that the world's going to come to a halt. It means that things are going to be different. And we can't sit here in New York, predicting what those differences are, but out through thousands or millions of businesses, those decisions are being made. We just want those people to be connected, have the tools they need, and the money they need to make those decisions.
How have all the rate markets this week then impacted the value of those loans? Could you, instead of 15%, is it half that, I guess, today in a week?
Yeah, who knows? I mean, I'm on the Fed, and I study the Fed data. We've had a couple of emergency meetings, and I've looked at all. Look, nobody knows. Sorry. I certainly don't. So.
Jim, you're out with a book, The Innovation Stack. Yes. What the heck is The Innovation Stack?
So I picked the worst week in history to launch a new book, but the subject is totally relevant. I'm talking about a phenomenon that I observed at Square, which was how Square was able to survive a direct attack by Amazon while we were still a startup. And we survived because we had this thing that's called an innovation stack. And it's a series of inventions, and it's different than normal business. And when I saw this pattern, I did some research through history, and I figured out that companies throughout history who change markets, who actually invent new markets, have this thing at their core called an innovation stack. Yeah. And I didn't want to write a business book. I actually brought you a copy. Like, it was originally a cartoon. It was a comic book. So when I originally wrote the thing, it was in graphic novel.
So the camera can get that.
So yes, it's a comic book. Here's the destruction of a major city. There's a murder, and this is how banking started. Okay, so here you go. You can have that. And look, I'm not trying to make light of it.
Right.
we are going to go through a rough period. Some people are going to go through a horrible period. But we want those people who are out there doing it to at least understand that, look, the history of great invention and the creation of new industries occurs with people who are willing to try new things. And those entrepreneurs they're the people who bring us the future. And we just, like, I wanted to write a book for those people. And look, we're going to need that skill set more than ever, because nobody knows what's going to happen.
You talk about entrepreneurs and visionaries. You were here when we got the news that Bill Gates is stepping down from Microsoft.
Yeah.
Leaving the board, I should say. Your general thoughts on him, the tech space, these visionaries, as we continue to see a shift in leadership where some of the original founders are stepping aside?
Well, I mean, he's dedicating his life to philanthropy now, and he probably should do that because the impacts that he can have through what he's done and the money that he's raised and the contacts he's made and the ideas that he has. I mean, Bill's a voracious reader. He's a very intelligent guy. He's got a fantastic partner. He's got this fantastic organization, and dedicating more time to that when that may be the future is I think, a rational choice. And look, Microsoft is being very well run.
I thought I was excited about markets, but I think Jim Milkvenny of Square has more energy than I do. Thank you. Of course, the author of the Innovation Stack. Appreciate your time. Much more ahead, so stay with us. This is Bloomberg. The increasing use of chatbots by retailers is changing our shopping experience. Live Person is one of the companies that are helping brands go conversational to better connect with customers. Joining us now on our Retail Transform series, it is CTO Alex Spinelli, who's also the former global head of Alexa at Amazon. Alex, great to have you. I think the coronavirus has certainly been disrupting all of our consumer behavior. What in this moment do you tell clients?
Yeah, actually, thanks for having me. I could not ask for a better person to follow than Jim from Square, because some of the things he talked about are exactly the things that we're seeing. So our tool, we build a conversational cloud, which enables businesses to have real-time conversations with their consumers, both AI-driven and human-human. And what we're actually seeing now is a lot of our customers, and these are some of the biggest brands in the world, reaching out to us saying, we actually have to send our contact centers, our call centers, home around the world, and how can you help us actually offer a work from home solution? So interestingly, it's not a use case that we've typically looked at. Our solution is fully SaaS, so we're now really excited that we can suddenly help both big businesses maintain the connection to their consumers and also the hourly workers. And Jim mentioned this, how the changes might come to hourly workers going home. We can actually help them work from home and continue the continuity of being able to have jobs and service their consumers. So that's kind of the big thing for us right now over the last 2 weeks, is this swarm on, wow, our tools can actually be used to help both businesses and people continue to have some type of normalcy through this crisis.
Retail foot traffic last week was down 9%. So it's very clear that consumer behavior continues to shift. This is not a new trend to online.
Absolutely.
How are you managing that shift now that it's at such a rapid pace?
Yeah, so our tools are fundamentally digital tools, and our view really is that for most big businesses, your big box retailers, your big brands, websites and apps actually haven't produced the kind of returns that we expected. So we allow you from home, from your phone, from the tools that you're used to interacting with your friends, your family, your loved ones, your WhatsApp, your Facebook Messenger, SMS, iMessage. We allow you to actually have those conversations across the whole retail shopping stack in real time. And a lot of those are going to be automated, so you can actually get quick updates and status of things like, where's my order? I want to purchase something. I want to reorder something. And then also human to human, so you can get help when you need it. So we've actually seen our traffic to our services grow 8-9% just over the last 2 weeks, as you can see consumers not going out and actually wanting to do things more from the privacy of their own home.
Alex, you said that it was a pleasure for you to follow Jim Milkvenny there of Square. I'd be remiss, given that you are in neighboring Seattle, that's just neighboring Redmond, Washington. At the top of this hour, we got the news that Bill Gates was stepping down from the board of Microsoft to focus on more philanthropy endeavors. How do you view, Bill Gates, the shift that we've seen in Microsoft, and really in your world of tech, increasingly these big visionary and founders stepping down for the next generation?
Well, I mean, personally, I think it's fantastic. I think he's got a ton to offer. He's brilliant, he's smart, and he wants to help. Obviously, taking that financial power to go and do some real good in the world, which he's already done, I think, to a certain extent with the Gates Foundation. It gives me, a lot of pride from being from Seattle to see him do that. I think technology, if you look across, the progress, so economic theory will tell you that progress is really driven by technology advancement. And we've seen that really focus in the consumer space for a long time now, the consumerization of technology. I'm really excited to see what he can do as a full-time focus in trying to bring technology to some of the world's hardest problems. Well, so I think it's a great thing. Well,
my pleasure to have Alex Spinelli of LivePerson on this program. Thank you for joining us. And we will have much more ahead, so stay with us. This is Bloomberg. For the workers of the gig economy, there are no sick days, no full-time benefits. This is all as the coronavirus spreads. And some say this creates a high-risk situation, not only for the gig workers and their customers. To discuss is John Chewang. He's co-founder and CEO of Aquin. Aquin is a talent services company, was the first to provide full benefits to its temporary workforce and is now encouraging others to do the same. John, your thoughts on if this could be the first real big test for the gig economy?
Yeah, yes, it's really important. And unfortunately, I'm not sure the gig economy is going to pass the test. The gig economy, unfortunately, is a public health risk now because of two reasons. One, they do not give sick leave. 50% of our population is covered by state laws and city laws that require sick leave. Yet the gig economy circumvents all these laws by considering people contractors. 73% of private employers give sick pay, yet gig economies 0% give sick pay. So as a result, you have now 10 million people who cannot afford to do what we need them to do, and that is to do social distancing. And they are more often than not public-facing frontline service workers. So if anything, we need these folks to be able to afford to take a day off if they have symptoms and stay at home. But instead, they're compelled to work in the public, and that's a real problem in today's world.
Well, and some of these gig companies aren't doing what you did, which is providing full benefits to its temporary workforce. They complain that it's too much of a hit to their balance sheet and their income statement. How did you do it?
Yes. Well, we did it we're very proud to do it in 1993. This is when 40 million Americans had no health insurance, and staffing companies did not do this. So we wanted to be part of the solution rather than part of the problem. So we worked very hard with insurance companies and very hard with the technology companies to figure out how to offer benefits, and we did it. And what we learned is that offering benefits doesn't cost you money, it makes you money. And the reason why it makes you money is because you can attract and retain the very best people. So that's what gig economies should do today. They should invest in their people and give them not only sick pay, but health insurance, much like 90% of Americans who have health insurance today. But instead, most gig companies don't give any health insurance at all. But if they did, I think they would realize that they would attract and retain the very best people, and they would actually make money.
What would be the one change that you would like to see the gig economy learn from this virus?
Right. I would like the gig economy to understand that they have a really important role in our economy. And they are doing such wonderful things in the economy in terms of helping people find opportunity easily. And that is really great. However, because they avoid all worker protection laws such as health insurance, workers' comp, they also avoid minimum wage, unemployment insurance, overtime laws. That really kind of negates all the wonderful things they do. What I think the gig economy has to be able to do is be able to pay people a fair wage, at the same time charge customers a fair price, and then there'll be a truly breakthrough service. But right now, they only get half the equation. So I'd really like them to think about investing in their workers and really make the gig economy everything that it can be.
Well, my thank you to John Chuang. He's a Quinn co-founder and CEO, for joining us there. And we do have some more breaking news to bring you. 10% down, 10% up. What that means, JP Morgan has frozen trading for some of their wealthy clients amid this historic rout. We are clearly in a bear market. We had fallen off 20% from recent highs. So against all this volatility, JP Morgan has froze their trading for wealthy clients amid this historic rout. And then, of course, we want to recap the headlines crossing earlier this hour about Bill Gates, saying he is going to be stepping down from Microsoft's board. He's saying in a blog post, quote, "I feel more optimistic than ever about the progress the company is making and how it can continue to benefit the world." Gates founded Microsoft in 1975 and grew it into the largest software maker in the world. He hopes to devote more time to philanthropy. And that does it for this edition of Bloomberg Technology. This is Bloomberg.